Hey traders, John Howell here, and in, alright, come on, get there, come on presentation, you can do it. Alright, in today's video guys, I'm going to be talking about the stock market, short-term, why I see a short-term backing pattern or short-term pullback, and I'm going to just recap what I talked about last week there, but I'm also going to be covering the stock market long-term. I've been doing some analysis this morning, my time getting ready for the week long term, and you know guys, even though I see a short-term pullback and then I see actually a rally coming as well too in the stock market, I'm going to share with you what I see over the next 6 months or so what's likely to happen. But we've got to be watching what the market is telling us, and why we actually over the next, say, maybe 12 months we could be forming one massive rounding top. And if that's the case, get ready to short the crap out of it, because that will be the next big short. I'm going to share with you what I see through there. Also, I'm going to share with you guys silver and gold long term, what I see through there. Also, the US dollar and why I see the death of it. And while I'm here, I'm going to be touching on, let me just do this here right now, right in front of you, professional editing. I'm going to be touching on your long-term success in trading. And that's what I want to be covering as well too. So some simple things you can do to make sure that you're having long-term success in your trading. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, if you haven't done so, go to johnsfreegift.com, johnsfreegift.com. Because there's the trading cost there, guys. Firstly, when you go over to johnsfreegift.com, put your email address in there. On the next page, you're going to get access to, I think it's a 90-minute presentation where I walk you through my #1 trading strategy. And then also you get access to the membership area where I'm going to give you access to a free trading course as well too, to get you started. Chart reading techniques, trading techniques, and so much more. So go to johnsfreegift.com. Plus also there's a bonus interview there with my mentor as well, how he made $2 million. There's so much more I'm just giving away. I really want to help you. So go get access to that right now. So let's get straight into the trading of what I really want to share with you today in the markets here. Firstly, let me just go through what I promised you guys. So firstly, what I see here is that if I just, that's the resistance point there. There's so many resistance points through here. Let me just delete this line off here for a minute. That's the support line there. There's a resistance line there as well. As you can see, right now we're really at this conjunction point right now when it comes to this high, and a lower high through here. And so right now, isn't that just fantastic? You guys, if you guys heard that message there, it's one of my private clients just emailed. Just want to show you my results. I took etc this month. My account is up more than 50% using your exit strategy. Fantastic, absolutely amazing. Wow, that's it. Oh, wow, ain't that incredible? Oh, I love that. I love when the market's crashing and everything's turning to shit, and then I have a private client just message me while I'm doing the video live, and then they say that this year, it's not this month, but this year, his account is up more than 50% in less than 3 months. Wow, well done, Frank. If you're watching this video, Frank, well done, my man. Tip top to you. Oh wow, absolutely love it. Me and my private clients, guys, are absolutely crushing it. Anyway. Let's continue here, right? So high, lower high. So we could be seeing some form of a bucking pattern, and I do believe that. It's going to be really interesting to see what actually happens here. Same for the S&P 500. We're getting a lot of sort of long-term support and resistance levels through here. Let me see if I can just. There's 2 different levels here that are coming into play. Let me just delete that one as well too. I don't want too many lines on my charts, guys. I hate too many lines on my charts, because I just want to see the most predominant ones that are relevant right now, and then I can add the other ones, right? So the most predominant ones are this one here, because that's a long-term support level there, and then it's rallied up and now it's actually rejecting off this level here. So again, guys, I wouldn't be too surprised if something happens and the market actually drops here. And then same for the Nasdaq as well too, but the Nasdaq's actually quite a bit different as well too. We do have the Nasdaq actually slightly breaking above that. So I don't see actually too much of a pullback happening with Nasdaq, which is actually very, very, very interesting through there. Let's go. One thing I want to share with you guys with this thing through here. There's one of my private clients again just messaging me. Fantastic. He's just saying that he was using, because with my private clients, guys, we actually have the way that with my private clients, I teach them, I show them exactly what I'm doing for my longer term plays, and then we also just follow a simple trading system. And then he said, by following the trading system, but using my exit rule and sticking to it with no emotions, he actually had a phenomenal month, which I'm so happy about. Well done, Frank. You're absolutely crushing it, man. Everyone else is losing their shit, and your account is up 50% in less than 3 months. Awesome job. So we can see it through there. Again, guys, if you want to learn my trading strategy, just go to johnsfreegift.com, and on the next page, you'll see the presentation there. It's a 90-minute presentation, and you'll see the strategy that we actually use and all that sort of stuff as well too, that I actually use with my private clients. So go do that right now. Get the help you need, guys. So we can see through that there right now, okay? Now, the thing is, what I see happening, guys, on a short-term basis is that we may actually see a bit of a drop here. If we see a drop, we're probably likely to, even if we drop down to even a slight lower low, we're probably likely to rally up to a 50 to 60%, maybe even as close to as high as this level through here. The Dow Jones, same thing as well too. I see the Dow Jones, even if we do get a bit of a backing pattern and then a breakthrough, that would be powerful. And again, rally back up to even close this gap up through here. And same for the Nasdaq as well too. Now, I see at least, if I look at the S&P 500 and use this as an example, I see at least a 60% retracement out of this level, right? So this level through here. So I see at least this level here being tested. And if I bring that back, it's probably then going to be a bit higher than that. So probably likely to see a 50 to say 60% level, maybe even potentially a bit higher, probably even an overshoot. When it does rally up. And again guys, it's very difficult to say whether we're going to close this gap or not. But if we look at, say, things like the Russell, we have if I look at the Russell 2000, if we get a bit of a backing pattern, we've got a very high probability that Russell is, and then we start to break up out of this level. We have 1, 2, 3 gaps here. At least the first 2 gaps are very high probability of being filled, and so on and so forth. So guys, on the short-term basis, okay, because I'm about to get into long-term, on a short-term basis, guys, I do see a bit of a drop through here coming. But already here in Australia, right, we're already starting to see progress. And what I mean by that, if you watch my video that I did today, where I just went on a bit of a three-minute rant about what's happening in the Australian government, we have now gone from a 25 to 30% increase every day of cases, and that's actually gone down now to about 9%. Now that's right now, that could pick back up or whatever, but it seems like we're moving in the right direction here, even here in Australia. I still do believe that America is about the next 1 or 2 weeks that they're going to get the biggest, hardest punch, and then it's probably going to peter out from there. Now, guys, where am I making that up or what? And the answer is no. What I've done is I've listened to interviews and I've read and I've studied back from even the Spanish flu, right? 1980, right? When was that? I'm going to do this here. Spanish flu. Was that the 1980s? Yeah, sorry, the 1980, right? So even when that, right, even the first case when that came, guess what? It came, it hit, and then it disappeared quickly. So every time you actually see, when you're looking at that, a severe case like that, but then if you look at, say, something like SARS or whatever, right? What happens with these viruses? They come, but then they disappear really quickly. And so the reason why I'm saying this is we're getting towards the end of this is because that's what happens, right? It builds up, gets really worse, and then suddenly, bam, it drops really quickly. It goes away really quickly. That's how these viruses work. Even from back when the Spanish flu was really bad. Now, whether it comes back in another 3 or 4 or 5 months from now, we don't know. But right now, in this current present moment, we can say, okay, Even in the worst case scenario, they build up to really bad and then they drop off really, they disappear really quickly. Whether they, at the end of the year, whether it comes back again or not, is yet to be seen, okay? So that's why I'm saying that this whole thing about the virus is probably likely to die down a bit, and that's why I see, at least for the next 2 or 3 months, we're likely to rally either way, bit of a drop, rally, and so on and so forth, okay? Now, so that's the short term there, okay? So over the next sort of 3 months, 3 months, 6 months and more, probably towards the end of this year, towards the end of the election, there's no way Donald Trump is going to let this market crash even more, right? He wants to go into the election saying, "Look, I fixed the bug, and the stock market's all-time new highs." Now I don't know whether the stock market will be at all-time new highs, but we will see. But I do believe we're likely to get a strong rally out of this over the next say 30 days. The rally is probably likely to start. But that being said, guys, let me share something with you. I'm going to bring up a line chart now. All right, and I'm going to bring up a line weekly chart. I want to bring up the S&P 500. And if I squeeze up my line weekly chart here, this is something really, really, really interesting, guys. And I'm not saying it's definitely going to be this, but look at this here. We have a major low, higher low, sort of a major high low there, right? We had a sort of an equal low, we had a slight lower low, and then we rallied out, right? We had a high low through here, we had some sort of low here, we had a major higher low through here. Okay, so if we actually have a look at that as a percent retracement from there to there, let me delete this off the screen now so we can see it. Look at this here, guys. So it actually retraced from that low point there. Look at this here, from that point, high point there, it actually came down and retraced what? Right on that 50% level. See that there? And then retraced. But now if we go back to the high point up here, you can see how we've actually retraced way more than 60% retracement, way more than that, and now we're rallying back up. Now, why am I pointing this out to you? Because without me bringing my thoughts into it, what I'm looking at right now is that the weekly chart here has just broken this low through here. So if this is going to continue to the upside, if this is going to continue rallying back up to all-time new highs, and we're going to see another 3, 4, 5 year boom, we want to see this thing rally up very strong. We want a strong move up from here. Okay, just like these moves through here, we want a strong rally up. Now, if we do get if we overall get a strong rally up, guys, from here, and then we start to sort of peter out and we start to drop back down through to here, that is not a good sign, because now we're forming a major top. Okay, so, and guys, if you look back in history, even 1929, guess what? The tops in the markets take time, right? They don't just go straight down. Even in 2008, right? What happened? We dropped down for a while, but then we rallied up to create some sort of a topping pattern. The market will give us some signs. That's what I'm saying, guys. Even on a short-term basis, we're likely to rally to a 60% or maybe even more to start forming that. If we are forming a major topping pattern here, we will start to see that. If I go to my monthly charts here now on the line, you can see that once again, we're just keeping an eye on this, okay? Now again, guys, this is probably going to take another 12 months or so to fill out. But if we keep an eye on this and it starts to really form into a massive sort of shoulder here, and you can see it, right? We have shoulder, head. If we start to do this here and then we start to rally down, that's when you can start to say, okay, look at this massive head and shoulder. And that's when, guys, I'll be massively heavily short. Right now, I'm long this market because we're likely to get that rally. But guys, as I said before, right? Like I won't be holding on to an all-time new high for this rally. Once we start to get to that 50 to a 60% retracement, and I can see that there, you better believe I'm going to start taking off a lot of my trades because I've been really with a good profit by then. But once we start to see this thing, right, I believe we're going to get a retracement down to at least this level through here. So this level through here. So I'll be loading up massively on put options with plenty of time, because that may take 6 months. It may take 2 years, right, for that to hold. And then so I see at least that getting to there. Okay. And then the S&P 500. Same for the Nasdaq as well too. If I bring up that weekly chart on the Nasdaq, look, we've actually made a significant. We have this low, we had a significant low through here. But what what may happen and what can happen is like this. So we had this low through here, and then we rallied up, and then we continued up from there. If we rally up and then we start to do this, guess what? Now high, low, high, and then now we probably continue up, and 40,000 Dow, here we come. You know what I mean? Now, guys, what I want you to do with this analysis is that I know some people say 40,000 Dow, that can never happen, and so on and so forth. Guys, if you've been involved with this market for a while, you know that the unthinkable can happen. What you don't think can happen, it can happen, right? Anything can happen in this world. And that's why we just got to keep following, like, okay, what's really going on right now, and what's so on and so forth. We have broken a low, so this is the first sign that the sellers may be coming in long term. But we just need to keep an eye on that. Let me go back to that monthly charts once again, and monthly chart as well. Even in the monthly chart here has actually broken that low as well too. This is the first time on the monthly chart that we've actually broken this low. We have a low, higher low. We have this major higher low, higher low. This is actually now where we are here right now. So we're probably going to close below that. That is definitely not a good sign. On a short-term basis, 3 to 6 months, we're probably likely to do this. We're probably likely to fill in some form of a top. Guys, even back at say 19, and we're probably likely to do that, and then actually drop down, okay? That's what the market does when it forms tops. It takes time for it to roll over, right? We don't just simply just go straight down. Yes, we've got a flash crash here, but we're probably likely to get a rally, and then that. If I bring up the, even if I bring up the 1929 stock market crash chart, let me just do this here. So let me just share this with you here. I've brought up this screen here right now. And what I'm trying to share with you guys, I'm trying to share with you that don't be such a rush to short this market. I know a lot of you guys are short this market right now. I think it's just going to keep going down and keep going down. And that's it. We're going to depression and so on and so forth. And I just want to share this screen with you here. Let me go back to the 1929. Now, the thing that I want you to realize is that if we're comparing now to, say, the 1929 period, all right, let me bring this over here a bit more, right? Look what was actually happening to the stock market here, right? We actually went through, it was like from where? From like 2020, right? To where we are here right now, which is basically, you know, the roaring 20s, right? Which is 10 years. And you can see, right, we just kept going up and up and up and up. There wasn't really any relaxing periods through here. Now, yeah, we are looking at, I'm pretty sure this is a monthly chart, as you can see. But look how vertical this chart is. So I don't think we can compare today to the 1929, right? Because if I bring up the monthly charts, say on the S&P 500, or even the Dow Jones, right? Look, we've had a rally up, short-term pullback, rally up, pullback, rally up, and a sideways movement. See how sideways this has been? So, and same for the S&P 500. If we look at the S&P 500, right, we've had a rally up, nice pullback, rally up, few-year pullback, rally up, and now we're still sideways here on this monthly chart. So it's very, very hard to compare this to the 1929. But the purpose of me telling you this, is that even at the top of 1929, as you can see, right, what do we get? We got a drop. We got a nice rally, around about 50% of the rally. And then we continued down. If I bring this up even closer, right, you'll be able to see that this drop down was 1920. This is the 1929 crash. And then it rallied up. And then we actually dropped down. But remember, guys, this from this bottom point through here, 1929 November, to this point through here, that was, what's that, November? So that was 4 months, right? 4 months of a rally before we actually dropped. So from the actual bottom of the 1929 crash to where we definitely went into a bear market, it was pretty much 12 months, right? 12 months until we definitely went into a bear market. What I mean by, or we definitely created a downward trend. Yes, this selling point right now we're getting in the actual stock market has been more in bear market territory, but we need to see the market tell us, okay, high, lower high, breaking past these lows. This is when the bear market started, right? This is when the sellers were definitely in control. High, low, high, low, high, low, all the way up, higher, low, lower, high, breaking down, then breaking down. Guess what? Then we started to see, after we saw this pattern here, that's when we started to see massive selling for many years to come. So, but right now, if we compare, say, to the 1987, right, could we compare today to the 1987? Because Paul Tudor Jones did an interview a while ago and said maybe this is like 99. Actually, he said he compared this to 99. Firstly, I want to share with you 1987 here. I'm using the macrotrends.net charts, guys. If you're looking for this, I just typed in, into Google there. But as you can see, right, guys, if I bring this up a bit closer, this here was the 1987 crash. Now, is this what we're seeing through here, right? Because we went through, we went through here, right, which was 1982. Looks like there was a recession there, and then from 1982 we had a sideways period for a while. Then we had a rally up, sideways rally up, and then a drop. And now we're having a bit of a rally up through here. But look what happened, right? We just continued up from there and then continued up even more, right? This is 1987 crash, right? And then now look what's actually going on through here. Now we actually picked back up. And now look at the market to continue. Once we actually broke what? Once we actually broke these highs here, this was actually still creating a higher low, low, higher low, higher low, breaking past these highs through here. What do you think that's telling you? The bull market's continuing, right? And look what ended up happening from that. Once again, guys, this here was the high point, and it's something simple as high, high, low, compressing up, then breaking up. Didn't do much for 12 months or so, but then we went for a big run. Look at that. Big run. And so that was when the breakout actually happened. It was probably around 1993. Okay, cool. Yeah, 1993, and then we had a massive run into 99. Right, as you can see. So, but we also can see Paul Tudor Jones actually talked about this being like the 1999 period and so on and so forth. But anyway, so I'm trying to share with you guys that I'm trying to share with you guys that the market will give us some sort of a clue if we are creating a rounding top through here. Okay, but that's what I wanted to share with you there. Silver and gold long term. Let's actually continue here. Let's actually bring up that weekly chart. Let's actually go to this chart through to here. All right, silver and gold long term. I'm definitely bullish long term with silver and gold. We're still making a low, high, low, high, low, some sort of high low through here. So that's actually looking quite good. And then also silver. Silver, if I compress this up, this looks, once again, guys, I would like to see that. I'd like to see silver really start to pick up from here. And really continue up. And once again, that'll show me this whole downward move through here. Let me actually delete this off the screen here. Right, this whole downward move, this flush below the low was one final low. And I'm telling you right now, guys, for the market is smarter than anyone else out there, right? The collective wisdom of the market itself is so much smarter than anyone else out there. And the better we can read the chart, the better trader will be. So what I'm seeing here right now is that if the market rallies up from here over the next, say, 12 months, and we start to do this here is probably likely to be one massive final low. This is going to be one massive bottoming pattern, and then we're going to see fireworks happen in silver over a couple of year period. So that's what I'm seeing through the long term. Now, let me just talk about the US dollar here, guys, for a minute. This is the US dollar long term, or this is the UP right now. I can't actually bring up the US dollar on my TC2000 platform. Don't know why, but I'll just use this one here, right? So one thing that I want to talk about with the US dollar, right, is the death of the US dollar. And why I say that is because we know the government's going to keep printing more money, right? Look what they've done. I think, like, was it $6 trillion they printed? They're going to keep devaluing it, and there will come a period of time where the US dollar goes down 30% or more, right? It's going to be really interesting to see what is actually happening through there and what's actually going on through there. From what I mean by that is from a world perspective. 2020 is definitely going to be a changing time. I see a lot of the blockchain technology kicking in over the next 10 years, and I see then the US dollar probably being devalued that much. And so they're probably likely to keep printing, and the more they print money, it's just devaluing the actual currency itself. So Not right now, guys, but probably over the next 5 or so years, we're probably likely to see a lot of things starting to take place. And it happens slowly, right? It just happens slowly. Who knows what's actually happening right now while this whole thing is, while shutdown's happening, right? That's a conspiracy theory, but on the US dollar there, that's why I say the death of the US dollar is probably likely to come, because they're not going to stop. As you can see, right? It's like Donald Trump says, the debt. And then he says, let's print another $6 trillion, right? So there will come a time where it's going to get too hard. And I believe, guys, if I look at this right now, the debt is not a burden yet, right? It may be slightly a burden, but not enough for it to create a catastrophe in the markets. Yet. But if we start to see inflation in the markets, if we start to see things really, really picking up, the stock market go, if we see things start to really, really pick up from here, then then they're going to be forced to raise interest rates, and that's when things are probably going to start to be haywire from there. The stock market will go, inflation will go, they'll be forced to raise interest rates from there, and from that's when things are likely to be really, really, really haywire. Because, guys, right now it is a debt bubble, but the debts are slowly coming into play. Right now we've had this one-time shock. That's probably we're going to get over that. We're going to get back to normal real soon. But then, slowly and surely the baby boomers and all that sort of stuff are coming into play, and the debt burden. So it's a more slow, gradual process that is happening with that there. When it comes to the fundamental of that debt, okay? So right now, because the interest rates are so low, they can actually afford to print all this money because, the interest payments of that is actually quite low. So therefore they can still service that payment. It's not until they actually start to raise interest rates that it becomes really, 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 really a big problem to that. And so, as you can see, right, when they did start to raise the interest rates, they got it to a point where it started to create a bit of a havoc in the debt market. And then suddenly what happened? The market really, really sold off pretty quickly. Then they started dropping the rates, and then that sort of normalized things. As you can see, what's happened right now, they've printed $6 trillion. They've dropped interest rates to zero. Things are likely to continue from here for a while. But when on the topic of the US dollar, we're going to come to a point, guys, where something else is going to take over, whether it's the Chinese or whether the whole crypto thing that's happening right now, whether they create their own digital currency, and then we have like a one world digital currency, and everyone's just following their own currency from there. So really, really interesting times long term, guys. But as you can see, if we sit back and look at this, things happen slowly over time. The top in stock markets happen over a 12-month period, right? Things really happen slowly. Like what we're seeing right now, we're probably likely to get a rally for the next 6 or 12 months, and then maybe we're going to create that right shoulder of that topping pattern through there, and so on and so forth. And that's what I want to lead into my last thing here about long-term success in trading. As you heard me talk about at the start of this video, I talked about how one of my private clients is kicking butt right now. I had one of my private clients just recently email me and said from the start of this year when he started, he had a $30,000 trading account, and now it's over 100 grand. Now, I'm not promising you guys that if you become a private client of mine, and so on and so forth, then I'm not going to guarantee that. He actually did a lot of work, but I'm so glad to see that one of my private clients, in the last 3 months, as this market's crashing, one of my private clients took a $30,000 trading account into 100 grand just by following a simple pattern and a simple system. And same with Frank. Frank just, his account is up more than 50%. I'm so grateful for that. They're absolutely just crushing it. And again, guys, if you go to johnsfreegift.com, the very first thing you'll see is a presentation. You'll see the strategies and the trading that we actually do, and you can see all the details to that. But your long-term success, guys, everything I'm talking about here right now in this video is based on what the charts are doing right now and so on and so forth. But if we peel back that, why are me and my clients doing so well in this market over the last, say, 2 or 3 months overall? And the fact of the matter is guys, because most of our trading is simply done based on a chart setup, right? We see a setup that meets our rules, and then we take it. And as Frank has shown me, that some of his trades are losing trades, most of them are profits, and then some of them are really, really big profits. And then, and then he just keeps kicking butt. And then it's just rinse, recycle, repeat, right? And that's how you, regardless of whether the market goes up, down, or whatever, if you just have a simple, powerful pattern that you can do to really excel in the market, then who cares about the market crashing? Who cares where the market goes long term, right? Like, who gives a damn rat's? Like, I don't. I really don't. I'm sharing with you what I'm seeing in the market in this video and what I'm seeing long term, but 90% of my trading is actually done, or 85, 90% of my trading is actually done based on, like with me and my private clients, based on a simple pattern that I know works and generates over a 90% success rate. And sometimes you're going to have the losses. Most of the times you're going to have the profits, and some of those profits are going to be really, really, really big profits. And it's just rinse, recycle, repeat, stick to it, and you can do quite well. If you want to be long-term successful in the markets, guys, then you're just going to follow that, okay? Because it doesn't matter whether the market crashes right now, it's going to continue forming those patterns. When the market goes up, it's going to continue forming those patterns, right? So that's the way for you to be honestly long-term and do really, really well. Just like my private client who turned a 30,000 account into over 100 grand. He absolutely crushed it. And then also Frank, who's doing 50% return in the first 3 months of this year. And he's not taking a lot of risk per trade as well too. He's only taking small risk per trade. So really, 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 really proud of Frank and how he's doing there. So anyway, guys, there's your update for you for this week, guys. Get ready. A bit of a broader view. And guys, you can absolutely crush these markets. And I hope in today's video, my goal and my purpose of doing this video and doing a bit more of a detailed video is to cover a bit more basis of what the stock market is, how it's formed, why you shouldn't be freaking out right now, why we should just be relaxed and calm when it comes to our investments, what you should be focusing on with the trading system, what's likely to happen long term in the stock market, and what you should be focused on, and so on and so forth. So right now, guys, long term in the stock market, when we're coming looking at the fundamentals there, we could be getting ready for another boom up to 40,000, right? But let the market tell us that. Right now, we're getting a bit of a danger territory where we could be forming that pattern. But at least for that next 6 months or so, we're probably likely to see a very nice rally. Hey traders, before you go, I want to give you my brand new trading course. If you go to johnsfreegift.com, you can get access to this free trading course. No credit card required. You got to learn things like the #1 chart reading technique that has worked ever since the 1950s, so you can know what's going on right now. You also learn the powerful trading technique that tells you when the market's about to make a massive explosion. You're also going to learn the top deadly mistakes that's killing your chance of being successful and how to change that today. You're also going to learn my #1 trading system for the last 15 years that gets over 90% success rate. We're only trading 1 hour per day. You also learn how my mentor made almost $2 million in one trade, and plus so much more. This goes for about over 12 hours long, walking you through the foundations, chart reading, trading systems, trading techniques, management, and also and mindset, everything that you need to know. And this is absolutely free. As before, no credit card required. So go to johnsfreegift.com right now. Go to that right now because I'm only doing this for a limited time only. Then I'm shutting it down. So go do it right now before it's gone, because when it's gone, it's gone. So go to johnsfreegift.com right now to get access to this free trading course right now. Go to johnsfreegift.com.